Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Skarica, founder of the Addicted to Profits newsletter online at addictedtoprofits.net. He writes for the Financial Intelligence Report. He's speaking to us from the beautiful Bahamas. Welcome back to the show, David.
Hey, good. Actually, one of the few places, you're talking a bit about COVID off the air, we have not had this second spike, and part of the reason we don't really have a lot of tourists here right now, especially with the restrictions that Canada and the States just implemented recently. But anyhow, yeah, I guess from a day-to-day living standpoint, it's pretty good because we're not locked down and you can go out and do some stuff, and especially, like you said, we have good weather and beaches and stuff, so... You know, if you can get down here, I guess if you're Canadian, you got to find a way, maybe on your own private plane. You got that kind of money, you know. But yeah, it's a good time to come down for that aspect because we aren't locked down and we're not seeing a spike at all on this kind of winter wave that's happened, you know.
Well, with that, does that mean businesses, restaurants are open again in the Bahamas?
Yeah, but it's still difficult because, you know, I live in Eleuthera, which is a smaller island. And, you know, the thing is about a small island like this, that the resorts are more boutique orientated. So you can have boaters coming in from the States. You can have, you know, a lot of people maybe own houses here and they're longer term. So a lot of it, you know, with these really kind of strict measures Canada's taken, if you're someone who's a winter resident down here, it's kind of like, well, you could just say to yourself, I'm just going to wait this out, you know. Wait till April, May, June or something until, you know, those are kind of lifted, you know. So, but yeah, the restaurants, and another thing too about Eleuthera, Nassau's tougher because the big resorts, those resorts are only maybe 5-10% capacity right now because there aren't a lot of tourists here, especially after Christmas. January to like early, February is usually a kind of a lull until spring break anyhow. So, yeah, Nassau will be a little difficult, but another thing about Eleuthera, again, it's like being in a small town. It's like if you're, I don't know, in a small town on Vancouver Island or something, you know, most of the restaurants will be little mom and pop shops that they own the building, so they don't have to pay rent, and that's what's kind of like here. So, with that, you know, with that makeup, it's like, you know, maybe they have to fire or, like, you know, just lay off one person and they do a little less business, but they can kind of squeeze their way with this because not having that overhead of a lease or rent is absolutely huge, you know, for a small business.
Now, we've had this Robinhood Reddit message board attack on the hedge funds using little GameStop as a lever. Are we going to see more of these targeted things? Are they going to say it's time to take on the big boys at their own game?
Well, the one thing that's kind of fun ironic about it is that when there were a lot of this sentiment kind of turned against Wall Street, you know, and maybe, you know, after the financial crisis, you know, one of the big movies that kind of exposed the corruption on Wall Street and all this stuff going on was the Big Short movie. And of course, that movie made the shorts the heroes, the guys who all shorted the housing bubble and, you know, using the credit default swaps and, you know, and made a lot of money, and it made, you know, and it made it look like those guys are exposing the truth, and now somehow the short sellers have become, you know, the enemy. Now maybe it's because of the way Wall Street does it. Like the GameStop thing was ridiculous because, you know, naked shorting is supposed to be illegal, and there's no way that over 100% float of a stock should ever be, you know, exposed. So, but I think there's something probably more beneath the surface in terms of there was a bunch of small retail investors. You know, because whoever started that really knew what they were doing, right? I think the guy who started it was actually a chartered financial analyst or advisor, and, you know, he registered guy, and he if you read his original thesis, it makes a lot of sense, and it's not just, like the ravings of a lunatic on a message board, right? Like, he really knows what he's doing, and he knew that there was this opportunity there with this, over 140% short position of GameStop short. But what happened, if you go look at it, is that, these stocks are slowly moving higher, the ones that were highly shorted over the fall, and they just kind of blew up here with, GameStop and AMC and BlackBerry and all these stocks just going completely crazy last week or the final week of January. And I equate to something different. I know there's this whole thing that Robinhood stopped the trading and screwed the little guy, but there's a lot of fiduciary stuff that Robinhood has to do to adhere to Frank Dodd. And I love, maybe people call me a shill for the corporations or Wall Street, but no one dislikes Wall Street more than me and the way they operate. But if you go look at the Frank Dodd rules, they have to have capitalization. Like Robinhood, for example, before this, they only had like $50 million in like liquid cash, and $4.8 billion in cash is used as a backstop against, the margin of the accounts. Now, obviously, they had to raise that money because probably these accounts exploded while the short squeeze was going on, and they weren't well capitalized enough. And that's also why they restricted the trading, because they're like, if we're going to get well capitalized, and if we're not going to let all these small traders blow themselves up. And by the way, they were going to blow themselves up when you're buying, basically like AMC and GameStop, essentially bankrupt companies. At tens of billions in valuation, it's always going to end badly. So that is what I'll say from that. And, I'm sure a lot of it, was Robinhood trying to save their own ass, don't get me wrong, and, maybe a lot of these hedge funds too. But, I think, that, that's that side of it. But the other side of it is, the point of view I'm taking is, I just think that, the first bubble I lived through was that 99, 2000 bubble. To a certain extent, and maybe there was a little bubble in junior mining stocks in the mid-90s too, when the X happened that I lived through. But whenever I've been through these bubbles, those two, and housing, and, the first Bitcoin, blow off and crash in 2017, 2018, you get this mass hysteria going on in, the public. And this combination of these lockdowns, people getting these inflated, we've talked this in the past too, these inflated, unemployment benefits combined with government stimulus checks and people just kind of sitting around with nothing to do. We've seen an explosion in retail trading since the spring. And then so you've got that aspect of it. So you've given these people a little bit more disposable income. Like a lot of studies have shown in a lot of states and a lot of provinces, people with the combination, again, with the inflated unemployment benefits and, candidates serve in the U.S. you get these stimulus checks, that is actually making people more money now than a lot of them were working, especially in kind of the lower income arena. So, and so you got this mania, and then this kind of like this, and then it's just like there's no real research going on. I know I said that guy had a great thesis at first, but a lot of it is like entertainment. People are using memes and video gifs and all of this kind of thing, and that's not real investing. So my analogy is this is the end game. Like this is like we've seen all these trillions of dollars printed. We've got money at zero. You got these people getting free money from the government, and they don't know anything about investing, and they're all piling into these crazy trades. And it really does remind you, if you read about what happened during the Tulip Mania, or the South Sea Bubble, or 1929 Shoeshine Boys, like that's what I call them. I call these people tulip traders or shoeshine boys. So that's really what they are. And people can say, like whatever, they gave it to Wall Street. A lot of people did, the stories of guys who had 20, 40, 50K in that trade, making, tens of millions of dollars. Well, shoeshine boys made money for a while too, right? One reason the fervor caught on was because, people act like when Joe Kennedy had the shoeshine boy giving him tips and he got out, like it was like August 1929. I think it was more like early 29 or late 28 when that happened and he got out, and there's still another surge higher, over the summer of 1929. So it was like, you're never going to get the exact top in this, and this doesn't mean that the market's going to top out tomorrow. But when I look at this, it really does remind me of one of these all-time classic manias. And like I said, I call them tulip traders or shoeshine boys. I remember in 1999, there was a company called Books A Million, appropriately named, or the ticker was named BAM. And BAM, it went up from like $3 to $100 almost overnight when they announced that they were going to set up like a website kind of like Amazon. remember Amazon was really just a DVD and book site at that time. And everyone piled into it thinking it's going to be the next Amazon. And then it collapsed right back down to 3. And that's kind of what the GameStop thing reminds me of. But I think right now you have this populism mixed in with it. Back then, in 99, 2000, people just wanted to make money, right? They wanted to become the next .com millionaire. They wanted to become, the telecom companies were all big. WorldCom, Nortel, Lucent, Cisco, all these kind of things, right? And they wanted to find the next, big tech stock, and they wanted to become rich. Now there's this mixture of populism mixed in where they want to give it to Wall Street, et cetera, et cetera. And I think that may make it worse in a way, because if you're that emotional and you're investing and you're kind of doing something on, based on screw these guys, I think that makes, even worse when it turns, because you're going to look for scapegoats, and you're not going to blame yourself for just getting wrapped up in a bubble, et cetera. And by the way, too, then you got to look at the legality. It's very hard to, prove any shenanigans going on. But when I see something like this, you got to know there's some pumpers and dumpers going on. And again, in 1929, Wall Street would have these stock pools where all the firms would buy a bunch of stock up, promote it, then dump it to their clients, and then move on to the next one. And there was there was really no SEC regulations back then. And RCA was one of the companies that did it to a few times. And this kind of reminds me of a stock pool. It's just much more transparent in a way. And, the gains were huge. Like, what happened in 29 is they looked double a stock in 3 weeks. Well, back then when you could only use 5 or 10% margin to buy, well, a double in the stock would essentially mean, you're up 10 or 20 times in your money. Well, this time people were just kind of looking to pump the stock 10 or 20 times. So, it's kind of similar in that regard as well, but it's kind of funny because this time it was done by a bunch of retail investors, where in 29 it was being done by Wall Street firms. But again, the long story short is I really just believe this fervor, that mania, this really is, people don't realize in the tulip mania, people were going to bars in Amsterdam and they were trading the tulips in the back of bars over drinks, and everyone was talking about it and this and that. It was kind of like that was your 17th century a message room, right? It was like having a few pints of beer or a glass of wine in a bar in Amsterdam, right? And trading your tulips right there. And that's how the common people kind of talk to each other. Well, that's what's happening with all this as well. And, again, you think about all the great investors throughout history, John Templeton, Peter Lynch, Warren Buffett, and now you got people speculating based on memes and gifts. Like, the whole thing is very ridiculous. And the central bank's fault. With their zero interest rates, a lot of us who have been warning or have been worried about the markets becoming kind of a casino have said this for a while, and I think this just exposes it as kind of a joke or pure casino that they've made it.
We'll have more with David Skarica right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Welcome back. We're speaking with David Skarica. David, is silver going to be the next target of these, citizen band against hedge funds?
Well, silver's always, there's always a lot of conspiracy going on with manipulation of precious metals market. What makes commodities more difficult is, you got physical commodities, you can go, gold, silver, and the metals are the easiest because, gold and silver you can keep relatively small. Like you buy a bar of gold or a bar of silver, it's worth, because they're precious, precious metals, it's worth quite a bit. And, you have to buy hundreds of gallons of oil to make it worth anything, right? and you buy 5 gallons for your car, it's $20 or something. So anyhow, so the thing about it is commodities are difficult. You have the physical, and then you've got these ETFs, which are kind of, a way of holding the physical through the stock market mechanism. And then you've got, the futures, which are really what drive the prices. And the futures are all the way up for, people looking for delivery or speculating. Like someone could have, a March 2021 contract. Someone could have a March 2025 contract and be 5 years out. So then you have all these different levels. So, and it's a much larger market. I think GameStop was like a company with a few $100 million market cap when this all started and went over 20 billion. Well, the silver market is worth 1.4 trillion. So it's much more difficult to move. Like I said, the CME squashed it by lifting margin requirements, etc. So, like personally being a long-term silver bull and somebody thinks it is going to go much higher, I don't know if I was that disappointed in seeing kind of the squash, because I don't really want my investments driven by a bunch of Reddit and, Reddit traders. I want silver to go up based on its own fundamentals. So maybe it's a good thing because now it's kind of got, just like one thing that's moved Bitcoin is that when, the mainstream and all these, smaller traders got involved, same thing with these recent Reddit trades. So maybe ultimately that means silver can really move because now you've got the small retail guy in, and small retail guy, there's enough of them can help drive silver because 1.4 trillion, like I said, is larger than GameStop. But it's actually a pretty small market as long as, as far as, the markets kind of go, So, we consider the crypto market to be small. It's got about $1 trillion market cap. So I think that, this is something that might be better for the longer term, but I'm really happy it didn't cause some kind of crazy, spike. And a lot of it too, remember, because of this stuff, it's disorganized, right? Like it's just a bunch, again, Reddit traders, and they could be buying the PSLV, the Sprott one, which holds physical. They could be just buying the SLV. They could be buying futures. They could be buying silver equities. Because, like, for example, something like, First Majestic had a north of 23% short position. So they could, there's all these things that they could be doing. And it makes it very incoherent, and it makes it, doing this, very poorly. It makes it like tough to manipulate something or move something this large. But anyhow, I'm still long-term bullish on silver, and if say a bunch of Reddit traders continue to blow themselves up in these other trades, and it causes a little more short-term pressure on silver because they just say, I'm going to get rid of everything, so I'm losing money. Well, yeah, use that to your advantage and buy some silver equities or silver.
We'll have more with David Skarica right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with David Skarica. David, do you think inflation is going to become a concern?
Oh, yeah. I think one thing that's really interesting right now, and one of the ideas that gold and silver are manipulated is because the authorities basically lie about inflation, right? They changed it back in the 90s under Clinton, and what happened was, it used to be just like if the price of a car went up 10%, it went up 10%. Now they have these quality adjustments. So, now we know that a car now has a lot more gadgets and or is a lot smoother running than a car from, the 1940s or 50s. So if a car goes up 10% in price, they'll say, it's an electric car and it's got self, driving and a radar system and blah, blah, blah. So really, didn't go up in price at all because all the new stuff and gadgets you're getting with the car means that even though it's 10% more expensive, it's just as good as that car that didn't have all that stuff was 10% cheaper, right? So so they do all these kind of things and they adjust it for seasonals, and so that's how we never get inflation much above 1 or 2%. Even though if you go look at those cost of living indexes for cities in the States and Canada, most of those are going up at 10% a year. That's probably what inflation really is, but they just lie about it. So one of the ideas is, they suppress gold and silver, not really as an investment, a ploy, but more as, hey, if you keep those kind of depressed a little, it kind of, people don't say, hey, silver's 50 and gold is 5,000 or, 4,000. Why is, why is my cost of living, they're saying it's only 2%. It must be higher that these metals are going higher. So anyhow, that's from that standpoint. But if you go look at, there's numerous things happening now on the inflation front. Number one, you have supply chain constraints. One reason you're going to see food prices move higher is that things like, workers picking fields and farms, working in a manufacturing arena where people are close together, putting together things for houses or whatever manufacturing it may be, putting together processing food. That's all high risk with COVID, right? So, people being close together, being close proximity, like manufacturing warehouses are about one of the worst places you can be in something like that during a pandemic. So that's going to push prices higher because we have things like supply constraints. We're not going to have as much supply hitting the market. So you have that at a time when, I think the economy will open up a little bit more, especially with, the vaccines. And I think we're just I think more importantly, we're going to hit some form of herd immunity. Like probably, if you look at the history of these pandemics, they take 12, 18 months, so probably by this fall. So, everything will open up a bit and you'll get more demand at a time when supply is constrained. And then you got the government doing all these stimuluses. Like in the States, they're going to do $1.9 trillion. And then they're probably going to do another $1 to $2 trillion for their longer term Green New Deal infrastructure projects, et cetera. So that's another $3 to $4 trillion coming, which is 15 to 20% of GDP. And the deficit was already going to be about $3.5 trillion this year, which is about 17% of GDP, which, by the way, that was about what the deficits were during World War II. And you're going to add another, 15, 20% on top of that. So I think, that's inflationary. You have to print that money or you have to borrow it and you debase the currency. So I think, we're all setting up here. Now, if there is some kind of short-term shock in the stock market, because actually that's one thing when I go back to the Reddit traders, I should have noted a little better maybe, was the one thing about them is that to me a warning sign for the rest of the market. A lot of people would say, oh, they're just these small little cap stocks these guys tried to squeeze. But no, that was kind of a warning. It's kind of when the Hunt brothers, squeezed silver, that was the end of the commodities bull market in 1980, right? Even though silver is one of the smaller commodities. So I think this is a sign that, again, we're in this mania phase and near the end of it. So we may see kind of a little deflationary downturn if there's a big smash in the markets. But again, the way they're going to deal with that is to print more money, do quantitative easing. I wouldn't be surprised if the market sees a 30 to 50% drawdown, kind of like it did last March, or it did in the 2007 bear market, that they start buying ETFs and doing all kinds of crazy stuff like that too to support the market. And again, that's just more inflation, more printed money, et cetera. So yeah, I definitely think the next 2 to 4 years, and you're seeing it right now, the soft commodities, the agricultural commodities, they're all going up like crazy. And I think we are seeing inflation all over the place.
David, thank you so much for chatting with us.
Thanks for having me.
My guest has been David Skarica, founder of the Addicted to Profits newsletter. You can find him online at addictedtoprofits.net. If you have any questions for David or any of our other guests, you can send them to info@howstreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.